Hi there, thank you for viewing this week's video. Let's look at the indices and check out how they have performed. Also, the outlook for the upcoming week. First, let's do a quick discussion on the market performance last week. The US market began the short week of trading with slight pullback as they struggled to continue the bullish momentum. The rally on Thursday provided the sign of bullish momentum continuing, but was quickly undone as non-farm payroll was outstanding, as such that the market feared that the interest rates will go up faster, and of course, coupled with Elon's email misread by the market, condemned the US market to a weekly loss. Going to the Asian market, STI struggled to move higher, ended the week almost flat and stuck at the recent level. Hang Seng recorded a week high of 3.5% as Shanghai reopened, but closed the short week of trading at 1.8% after the Thursday's pullback. Now let's take a look at the performance chart, and we will see the exact performance of the indices for the week. So what we see here is that you are looking at the performance chart with Hang Seng, the best performing index for the week, as it ended 1.8% up. STI is here, almost flat, and then the US market is down 1 to 1.2%. Okay, so what we are looking next is the performance of the US market first. So let's start with the Dow over here. So from the technical aspect, the US market generally held at or above its breakout point, which provides a glimmer of hope. As if you remember last week's video, I mentioned a very important point where these levels, these indices cannot cross below in order to sustain its bullish momentum. Okay, so I did also mention last week that the US market will tend to take a break because we see consecutive upside, and definitely there will be some pullback in order to help. Because I also said that personally, I hope that it could rally instead of pullback. But of course, the pullback takes precedent. So what do we see here on the chart? You can see here is that the short week of trading, there are some consolidations over here with the high for the Dow for the week is 33276, while the key support level, which is 32673, it's remained intact. When there are 2 days, it attempt to break below, but managed to recover well and close above it. Okay, so what we want to see next week is that if the Dow was able to break out above this breakout point, 33276, it may continue higher to the projected level around 34103. Conversely, of course, if it breaks below this key level and stay below it, there might be some failure in this market recovery, and then there might be more downward movement towards this support level here. S&P 500 also consolidating nicely. It seems to be a good positive consolidation because it managed to hold above its support level. So the key next is to break out from its resistance level. For S&P now is 4178. So once it breaks out from there, there is a chance to retest 4307. For NASDAQ, we see it holds at the support level here at 11991, and breaking above 12330 would help the NASDAQ to continue to move higher. So throughout the week, there are some commotions going on where we see that Microsoft adjusts its outlook lower. Elon Musk says that it's going to cut its workforce by 10%, but I think the market misread it. The market suggests that there might be some slowdown, but actually Elon is suggesting that the salary is going to go down by 10%, but the hourly workforce will go up. So it's trying to adjust its workforce rather than going down. But overall, Elon tweeted over on Saturday at Twitter saying that the overall workforce is going up. So if you look at these consolidations, we need the breakout to happen. So next week we can break either way. We can break up or break down. So let's see how the market will perform next week. Now moving to the Asian market, we see STI struggle at this resistance level here. So the candle patterns over here suggest less bullish than ever. What we are looking at is that this consolidation, it's with a lot of uncertainty where the index struggle to move up and also struggle to move down as well. But overall, it doesn't look very bullish as yet, as I mentioned earlier. What we want to see is that, as what I mentioned last week, is to break above this trend line in order to continue higher. But if the index goes below 3200 level, it may continue lower to retest its 3172 support, which tells us that the sideways will continue. Hang Seng overall did well, as we can see it breaks out above from its resistance over here to test 21419 high. So we have the higher high here, and then next we see a pullback, and we need this to be a higher low. So holding above this support level at 20776 will be interesting. We see a sort of a hammer closing on Thursday, but of course the sell-off in the US market on Friday may sort of like affect the performance. So we've got to see how the market opens on Monday. So generally what we need to see is that if this is an uptrend or recovery, it will retest 21419 resistance and break up from there. And the next level to test is 21631. Now, wrapping up, the week ahead may be a turbulent one, despite we see some bullishness in Hang Seng, some positive consolidations from the US market. So although all these indices are holding above their support levels, but the upcoming US core CPI data announcement are key to the market's recovery. With the oil price moving to its recent high, can the CPI data show slowing inflation? Now, one thought came to my mind while I was looking at the market. The reason the oil price remains at the high is also because the US is the largest exporter of oil. Okay, so this is where you can Google who is the largest exporter, and then you will get to see the results. So we have the United States over here, what 11 million barrels every day. So which means that the oil price maintained at 117 or 110. The US market or the US government is making more than 11 billions every day. Okay, so they are making billions and billions of dollars. So no wonder the US government and Fed are confident about the economy, and only they are very bullish about the economy, while the rest of the market are not. So all the CEOs are saying that the recessions are coming. So so what are we looking at here? So we are looking at the true fact of the market. The market is going down, for the whole year. If you look at Nasdaq, is moving down over here, which of course the double bottom here is still intact. But generally, what we are looking at is that the confidence of the government, of course, came at the expenses of the own people. And of course, because due to the energy price skyrocketed high, then they are saying that, of course, the interest rate is going to go up to 3%, projected to be there this year. And many will anticipate the first rate cut will be in Q1 2023. So the riding through the storm in 2022 is the impetus thing to do right now. Now back to Asia market, can the stimulus continue to help the stock market? there are some good results from its corporate like Alibaba and Meituan. Of course, holding above the support level and breaking its resistance are the key signs to watch next week. Now for SDI, if the resistance doesn't break, it's just a matter of time. It will move down to test support level. So if so, sideways continue. Thank you for viewing this week video, and I will see you again next week.